Hello everyone, welcome to EPK Capital. We simplify investment and wealth management so you can build wealth for generations. Mutual fund, ETF, index fund, you've heard these terms. It feels like you need a finance degree just to open a retirement account. You're confused, worried about making the wrong choice. You just want to know, what is the difference? What if I told you it's simple, and one of these is not like the others? Stick around for the ultimate breakdown. All right, welcome. To understand these funds, let's use a simple analogy, grocery shopping. You could build a healthy diet by buying individual foods, like buying individual stocks. An Apple stock here, a Procter & Gamble stock there. It's a ton of work, and you might miss key ingredients. Or you could buy a pre-filled shopping cart, a basket with hundreds of items. This is a fund. It's a single package holding many different stocks or bonds. The confusion comes from how these carts are sold and what's inside. Let's meet the players. First, the most important difference. It's about the shopper, not the cart. On one hand, the active shopper. This fund manager handpicks what goes in the cart. They think they know which apples are best, trying to beat the market. On the other hand, the passive shopper. This shopper follows a simple shopping list called an index. The most famous list is the S&P 500 biggest companies in America. The passive shopper's job is to buy everything on that list. Their goal is to be the market, not beat it. So, active and passive are strategies. Mutual fund and ETF are the packages, the two types of carts. First, the mutual fund. This classic cart can only be bought or sold once per day after the market closes. You order at 10 a.m., get the 4 p.m. price. It's old school, great for set it and forget it investing. Then, the ETF or exchange-traded fund. This modern card is listed right on the stock market shelf. You can buy or sell it anytime the market is open, and its price changes all day, like a stock. So, how do these two packages compare on what matters to you? First, costs. Active shoppers need big salaries, so actively managed mutual funds have high fees, called expense ratios. Passive funds, run by computers, are dirt cheap. This is huge for long-term growth. Next, minimums. Historically, many mutual funds required $1,000 or $3,000 to start. With an ETF, you can start with one share, say $50 or $200. With fractional shares, even $1. Trading mutual funds, once per day. ETFs, all day. For most long-term investors, this doesn't matter. But for beginners, ETFs are easier to access and understand. Finally, taxes. ETFs are generally more tax efficient due to their internal structure. Mutual funds can pass on surprise tax bills, even if you didn't sell. ETFs are cleaner. Okay, here's the big reveal, the twist. Where does the index fund fit in? An index fund is not a third category. It's the shopping list, the passive strategy we discussed. You can buy a passive index fund in either package. You can buy an index mutual fund or an index ETF. They're the same shopping list, just in two different carts. The real battle isn't ETF versus mutual fund versus index fund. The real decision is, do I want an active or a passive shopper? Decades of data show passive wins for most. Second, do I want that in a mutual fund or an ETF package? So here's the simple verdict. Actively managed mutual funds are for those who believe a manager can beat the market and are willing to pay high fees. Index mutual funds are awesome, the original set it and forget it tool. Perfect for automatically investing every month. Index ETFs are fantastic for most investors today. Low cost, low minimum, easy to trade, and tax efficient. For most beginners, this is the simplest and best place to start. To recap, index fund is the what, the passive strategy. Mutual fund and ETF are the how, the package it comes in. For 99% of beginners, a low-cost index fund, whether ETF or mutual fund, is the simplest way to build long-term wealth. Did this clear things up? Let me know in the comments which one you use or if you still have questions. And if you're ready, check out my video on how to buy your first ETF. Thanks for watching. Subscribe for more simple finance. See you next time.